From New York City, for our viewers worldwide, I'm Matt Miller. We're seeing futures lower after a slew of economic data hits the tape. The countdown to the open starts right now. Coming up, futures lower as data shows even more signs of a labor market slowdown. JP Morgan's chief global market strategist is stepping down after a difficult 2 years. And Zelensky challenges Trump to present his plan to end the war, part of our exclusive interview with the Ukraine president ahead. Plus, we begin with the big issue, the U.S. labor market showing more signs of cooling.
This concept that economic data, goes down on an elevator and up on an escalator, right? Like there's momentum that becomes self-reinforcing. If we, in fact, actually get this very gradual decline in labor market pressure, I think that's actually quite a good outcome.
Joining us now is Jack Janasiewicz, portfolio manager and lead portfolio strategist at Natixis Investment Management Solutions. And Jack, let me just get your take right now on the labor market situation and how, the Fed should be reading these numbers, because every hint that we get that a cut may be coming usually drives the market higher. And yesterday we saw new all-time highs across indexes.
Everything that we pay attention to, from forward indicators to the current backdrop, continues to point towards a normalizing labor market. And I think when you talk about what we heard from both Chair Powell yesterday, Austin Goolsbee on top of that, and even this morning from Williams, who's talking about R-star maybe not being quite as high, it feels like they're really setting up for that September cut here. And I think the risk is that the market was concerned that maybe the Fed overstays its welcome, but you're continuing to see dovish comments coming out, and I think the market is going to start to react to that going forward here.
What are the other factors that you look at in order to continue driving this rally? I mean, we continue to hit new high after new high. How much further can we go?
I think the formula here is pretty simple, right? If anything, we're slowing probably back to trend growth. If not, maybe we settle in a smidge higher than what we've seen from trend. You have earnings that continue to grind higher in here. And also now you're starting to factor in the potential for that September cut. So when you put these three things together, that's a pretty good backdrop in here for risk appetite. Maybe we get a small pullback in here. That's just a normal reset. But that underlying trend, I think, is the one to pay attention to, which is very supportive going forward.
So you see stocks ending the year higher than we are now?
Absolutely.
All right, hang on one second. I want to focus in on the economic data for a second with Michael McKee, Bloomberg's chief economics and policy correspondent. He's in Washington this morning. And, Mike, we got a slew of jobs numbers from ADP and initial jobless claims this morning. How does the labor market look to you?
Well, it looks pretty much like what the Fed would like to see, as you were just saying. The labor market is cooling, but it is not freezing, not falling off a cliff. You look at what's going on with jobless claims. They remain elevated, 238,000 last week, and continuing claims continue to climb, showing it's a little bit harder to get a job. But according to ADP, jobs are still being created, 150,000 in the forecast for private sector payrolls on Friday is 160,000, so pretty close there. You take a look at the idea of what's going to happen next to the labor market. What are we going to see on Friday? Consensus 190,000 jobs. Remember, last month we came in expecting 188 and got 272. Jobless claims were elevated in the payroll survey week. The ISM manufacturing jobs contracted, 49.3 in June. We'll see what we get at the top of 10 o'clock with service jobs. And ADP, as I mentioned, 150,000. Now, you look at ADP versus the non-farm payrolls private sector job creation, and it really doesn't tell you what's going to happen. For 8 of the last 12 months, private sector jobs in the non-farm payroll survey have come in higher than what ADP has suggested they would. So you've got to look for maybe an upside surprise. The question is, how much of an upside surprise? Is 190 enough to forestall any Fed action as far as the markets are concerned? And if we get higher than that, how much does it push out the idea of a rate cut out of September, out of November? A lot will be dependent on what happens at 8:30 on Friday morning.
Hey, Mike, you only travel when you're following the Fed or the Grateful Dead. And I know that the Dead and company's in Vegas, so I'm assuming you're in D.C. for the Fed. What's going on?
I am in D.C. for Fed Minutes. That's going to be another data point for markets to consider this afternoon. And unfortunately, I apologize for keeping everybody around an extra 10 minutes today. I didn't make the Fed schedule, but they'll put the minutes out at 2 o'clock just as the markets close. And we're going to be looking for any kind of indication as to what they think the outlook for inflation and jobs is going to be going forward, and whether there was any dissension about the idea that we're only going to see one rate cut this year, because obviously it was closely divided between 1 and 2. So we'll get some clues there. But it's really going to be the jobs report on Friday that's going to matter, I think, going into next week for the markets.
All right, Michael McKee there in Washington, D.C. Thanks very much for joining us ahead of this 4th of July holiday. Now, Jack Janasiewicz of Natixis is still with us. And Jack, Mike mentioned the outlook for inflation. I'm assuming that your take is we're on the right path for the Fed to be able to start cutting rates, getting closer and closer to 2% on core PCE.
Yeah, absolutely. And I think the big picture level there is simply that the job market's cooling. And if we saw a reacceleration in that job market, then I think you could point to the idea that maybe inflation starts to reaccelerate, but we're just not seeing that. And the other thing I would point to, too, is there's really 3 line items that have been driving inflation. It's been the housing market, it's been motor vehicle insurance costs, and healthcare costs. And we're seeing actually 2 of those starting to lighten up. You know, last month we finally got that first month-on-month print for motor vehicle insurance rolling over. So you're starting to see some of those more sticky items that have been really accounting for all of the inflation backdrop starting to crack a bit. So again, not just the labor market, but some of the other stickier line items are finally starting to show some signs of softening.
Do you see any risks around the election, Jack? I mean, since Biden's catastrophic performance in the debate, the chances of Trump winning have climbed. Larry Summers has said Trump has the most inflationary policies he's seen in his lifetime. And now Goldman Sachs is coming out and saying, the chief economist there, Janasiewicz, that Trump's tariffs could boost inflation to the level that the Fed has to raise rates 5 times.
You know, we're certainly seeing that reaction over the last couple of days, right? We had the significant bear steepener within the bond market. We saw a little bit of an uptick in nominal yields, but the other big takeaway there for us is simply actually tips moved higher as well. So real yields moved higher. So we're also seeing a combination of modestly higher inflation expectations potentially, but on top of that, growth expectations moving higher. And so that actually might be a pretty good backdrop for earnings going forward. It's just a question of how much higher will those inflation expectations move. And I think that remains to be seen.
How do you want to be set up into the end of the year? What's your portfolio construction look like right now, Jack?
I think we're still going to expect what we saw in the first half work probably extends into the second half. So things like large cap growth and tech still run. But for us to see that rotation out of that trade, maybe down in cap, it's really going to come down to 2 things, right? The market needs a little bit more confidence that the rate cutting cycle is going to commence. And September certainly seems like that's starting to come into play here. But the other one is that any sort of slowing on the growth front is not extrapolated into a recession or even a growth scare, but that it's simply moving back towards trend. And if we get both of those ingredients there, that I think could lead to the shift in the breadth widening out, moving down in cap, and maybe even into international markets.
What is your cross asset take right now? I mean, you're bullish stocks. What do you think about bonds? Are you buying those if you think the Fed's going to cut more?
So right now, we think, given where we are with regard to spreads, and there's probably a floor in terms of how low rates would go, and we're sort of thinking roughly around 4%, maybe 3.75 on 10s. So not a huge potential kicker in terms of total return from the duration potential there. So it's largely a carry trade. And at this point, because we are optimistic on the equity side, we'd rather take more of that equity risk or the risk within the portfolio through equities. And so as a result, we're looking more on the treasury side to give us a little bit of an equity risk offset there. So really preferring rates simply because it's more of an offset to the equity risk where we think that's where the bulk of your performance is going to be driven from.
All right, Jack, great getting some time with you this morning. Thanks so much for joining us. Jack Janasiewicz there of Natixis. Joining us now with a look at the individual stocks moving ahead of the opening bell this morning. Let's go to Abigail Doolittle. Abby?
Well, let's start out with the shares of NVIDIA because that is one weight on the markets with the major indexes down ever so slightly. It's stock is down 0.7% after falling yesterday. And of course, it is in correction territory, down about 14 or 15% from the recent high. Possibly a technical breakdown ahead simply on profit taking. Let's take a look at some of the stocks that are working on the day, Matt, though. And starting off with the shares of Paramount, they are soaring up 14%. It looks like a deal may be back on between Skydance and Sherry Redstone. Skydance, of course, could buy Paramount's parent company, National Amusements. They own 77% of Paramount. And then David Ellison, under the old deal, was said to have merged Paramount with Skydance, and that is presumed to be the case here, too. But we don't know, so stay tuned. But shares reacting positively. Constellation Brands up 2.5%. They beat earnings in a nice way. Apparently, beer results topped analyst estimates. And then finally, Tesla up 1.6%. The gains continue into today, Matt. Over the last 6 days, up 27%. And yesterday, we were taking a look at the charts and the technical breakout. It looks as though that rise is set to continue.
All right, Abigail, thanks very much. Abigail Doolittle talking to us about some of the names moving ahead of the opening bell this morning. Don't forget, it's a shortened trading day today, and we did have, once again, all new record highs yesterday. Coming up, we're going to give you some international politics. Ukrainian President Volodymyr Zelenskiy speaks to Bloomberg about Ukraine's dependency on global aid and Trump's plan to quickly end the war before he's inaugurated. This is Bloomberg. As the war in Ukraine continues, funding to the country remains a big issue here in the U.S. Bloomberg's Anne-Marie Horton sat down with the president, Volodymyr Zelenskiy, in Kiev for an exclusive interview.
Домовлялись сторони про ceasefire.
We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries, leaders who are trusted. They might have different ideas, different views on the stages, how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they have almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart, and it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire
But we're going to see
broken.
more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
Передусім.
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor, it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well,
I saw
because
debates.
the answer of how this might all unravel will depend on also who's at the table from the United States.
Amongst other things, it might depend on who is the president of the US. Yes, that's a fact. Because the US, the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that, or they want to focus more on their internal politics. I cannot say, it doesn't depend on me.
So did you watch the debate?
Yes, I watched the debates. So, first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the US media, but I watched. And we are not electing the president of the US, so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard
What do you make of that?
Я скажу честно.
Let me be frank. For example, well, the decision is on US public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million, we're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
And that was Ukraine President Volodymyr Zelenskiy speaking exclusively with Bloomberg's Anne-Marie Horton in Kiev. Now, coming up, the morning calls, and then later, Jim Caron joins us. He is Cross-Asset Solutions CIO at Morgan Stanley Investment Management. He says we're at an inflection point between inflation and unemployment amid a slew of data. This is Bloomberg. looking at futures that are down a little, but after we hit all new records, look at the NASDAQ 100 there, 20,211. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Citi is downgrading Charter to a sell. The firm says the company faces risk to estimates and valuation with the organic broadband environment getting tougher relative to Wall Street expectations. That organic broadband. Next up, BMO is upgrading Permian Resources to an outperform. The analyst says he likes Permian's increased Delaware footprint, noting that that scale, along with strong execution, has resulted in a top-tier cost structure and strong operational performance. And then finally, RBC is initiating coverage on Intuit. With an outperform rating and a $760 price target, the firm sees strong trends for the tax software company, including potential upside from generative AI. Will artificial intelligence be able to understand the U.S. tax code? I think not. Let's take a look at the markets again right now. Again, all-time highs yesterday. It is a shortened trading day today. We got a ton of economic data. We're going to get Fed minutes out later, so we have sent Michael McKee to Washington, D.C. Right now, you see futures soft with the S&P down, S&P minis down about 0.1%. Small caps are gaining with the Russell 2000 futures up about 0.25%. Not a lot of movement in bonds this morning. We see the 10-year yield at 4.40. It was at 4.41 this time yesterday. The 2-year at 4.73. The 30-year at 4.56. The euro also continues to hover in that range that we've seen right around 107, 108. In fact, it's trading at 107.84 as we speak. Coming up, Jim Caron, Cross-Asset Solutions CIO at Morgan Stanley Investment Management, joins us. He says it's not the time for full risk-on positioning. This is the countdown to the open. I'm Matt Miller, moments away from the start of trading on what is a shortened trading day for the U.S. equities market. We hit all-time highs again yesterday on the indexes. Right now, futures are a little bit soft, but a lot of people, I'm sure, have already retreated to the beach. Take a look at the New York Stock Exchange opening bell. You got the United States Coast Guard ringing the bell there, and then you've got firefighters ringing the bell on the NASDAQ at the NASDAQ market site. Let's take a look at some of the other assets that we're watching. We're going to talk in just a moment to a cross-asset strategist, so it's appropriate to look at the euro stuck in a range, and it has been for a while regardless of the snap elections. We'll see if that changes on the weekend. The French, remember, will be voting in their second round. The euro dollar at 107.84. The 10-year yield at 4.40 right now. Down by a few basis points as maybe investors think they should lock in these rates ahead of, I guess, way ahead of September rate cuts at the earliest. And then you see NYMEX crude at 82.95, holding steady right around the level we saw it yesterday. One of the stocks that we're watching closely at the open, that we have been watching closely for some time, is Paramount. It's higher now on reports that Skydance has reached a preliminary agreement to buy Sherry Redstone's National Amusements and merge it with Paramount. Bloomberg's Abigail Doolittle joins us now for more. Abby?
So the stock is higher. It's up 11%. That's just the best day in about 2 months, though, Matt, because I think that there's still a show-me sense here. So, yes, the news is that David Ellison's Skydance has reached a deal to buy National Amusements, which owns 77% of the voting shares of Paramount, $1.75 billion. Under the old deal, the expectation was that Paramount would essentially merge there. But one reason, at least our legal team here at Bloomberg is saying that the old merger did not happen is because Sherry Redstone is potentially at risk of being sued. Essentially, that if she were to get a bigger payday than everyone else, that she could possibly be sued by those shareholders and enter into litigation. So the question is, has anything changed now that would prevent that? Our legal team, their analysis at this time suggests not. But it's also interesting, Matt, because on the tape, we do have some headlines here. CNBC saying that the deal is expected to be completed by the weekend. And we also have CDS, an insurance on Paramount, coming in suggesting that investors think the deal is going to get done. But there is a little bit of an overhang, and as we speak, the stock is still higher, but at this point, well off the highs, up 8.6%.
Got it. Abigail Doolittle, thanks very much for that. Now, Tesla extending gains this morning after beating delivery estimates. Bloomberg's Simone Foxman joins us now with more.
Yeah, Matt, and shares set up for a 7th straight day of gains. We're looking at the highest numbers in the highest price levels since January and the best week since April if we finish out the week like we have seen. Multiple analysts raising their price targets on this name, both bulls and bears. From the bull side, we had Wedbush's Dan Ives writing that, quote, "The demand story has made a significant turn for the positive." On the back of these numbers, he's raised his price target to $300 per share, quite a premium to where we're trading right now. So is Bank of America. Deliveries notably better than expected. That price target $260, up from $220. Even on the sell side, folks like Guggenheim, where there is a sell rating, say that those delivery numbers were a materially positive surprise. They're maintaining their sell rating, but raising the price target to $134 a share. And most of those analysts bringing up the importance of that all-important robo-taxi event. We're going to get Tesla's details on this on August 8th, and that trading could be quite choppy until then, Matt.
All right, very interesting stuff. I think Abigail actually yesterday took a look at the technicals and said this was going to happen. So she should be taking a victory
That is
lap.
the 7th straight day of gains here.
Yeah. She said the stock looked set for gains from the technical perspective. All right, Simone, thanks very much for that. Constellation Brands higher after releasing its latest results this morning. Bloomberg's Jess Menton joins us now for more. Jess?
Well, Matt, looking into also the inflation story here because people were worried when it came to its profit outlook as well as sales that wouldn't keep up. But even though the results were a little bit mixed here, you still saw strong demand when it came to imported beer, particularly when it comes to Modelo. And that's really being driven by some of its younger customers that are pulling that out. If you look at its stock, though, it's kind of bouncing around up still about 1%, coming off a little bit of session highs here. But if you look at the food and beverage industry group here in the S&P 500, still about flat. And if you look year to date, that group is also flat. But Bill Maloney, one of our squawk here at Bloomberg, is looking at the technicals since you just brought that up, Matt Miller. And specifically, he's looking at the uptrend that this stock's been in since March of 2023, and he's seeing double top resistance around 274 right now. If you look at this stock right now for Constellation Brands, it's actually trading around 261 here. The A&R function, though, if you want to look at where sell side is currently sitting, 23 buys on this stock, 4 holds, 0 sells. You have Citigroup here with a buy, also JP Morgan overweight here. But then you can't forget also when it comes to Constellation Brands here, and especially because if you're looking at particular beers, overtaking some of the sales growth that you would have seen in Bud Light last year. So you still are seeing that demand, even though you are seeing some of its other segments pull back a little bit here. You're still seeing consumers buying Modelo, Matt.
Are you a Bud Light drinker, or I mean, you're Texan, right?
I'm Texan,
so you must
so
drink
I actually
beer.
tend to do more of the Corona and the Modelo, to be honest.
That's what I was wondering about.
I do like it. South
Jess
Texas.
Menton, you know what? I think Katie Greifeld is going to talk to a maker of alcohol-free beer.
Oh, okay, there we go.
In the next hour. So if you're ready to party on 4th of July, or not party,
Get ready.
but still want to drink beer, definitely stay tuned for that. Jess, thanks very much. Joining us now is Jim Caron, Cross Asset Solutions CIO at Morgan Stanley Investment Management. Jim, great to get you on the program. After we hit all-time, record highs again yesterday, is this going to continue into the second half? I mean, should we all have FOMO if we're not already in the market and just be pouring in?
Well, I think we are at a point where I think the upside is somewhat limited. It doesn't mean that we couldn't go up another 3% or so, or maybe 4%. It's just that I think a lot of the good news, or a lot of the surprises that that I guess that the market wasn't really expecting has really already occurred. And one of them, namely, is a significant increase in earnings, right? So at the start of this year, many people thought that earnings were going to be very weak, they were going to falter, and it turns out they were on pace for like 11, 12% earnings growth this year, and that's propelled the equity markets a lot higher. So where do we go from here? The issue that I have with this is that already, if we even start to look into 2025, what consensus expectations are for earnings would be around $277, $278, which would be about another 13% earnings growth from projected levels. If you even if you assign a multiple of somewhere around 19.7 or 20, which is around the consensus, that only gets you to about a 54.75 S&P 500. And as you were saying on the show, we're already through that. So how much further can we go? How much further can this overshoot take us? What we would need to see is a broadening of the rally, a cyclical recovery in some of the more lagging sectors to really start to participate.
Yeah, I mean, first off, I want to give a shout out to Jess Metton and Bloomberg News' equities team, because they've been writing about this earnings expansion. 3 quarters in a row, I think, of expansion after 3 quarters of contraction. But, Jim, you know, is that the S&P 500? Are all those companies growing earnings, or is it really the Magnificent Seven growing earnings and the rest of them still in recession?
Yeah, that's it exactly. I mean, if you look at the top 10 companies in the S&P 500, they account for probably about 38% of the overall earnings growth this year. I mean, disproportionate. If you look at the S&P 490, so X out those, say, top 10 companies, earnings growth is flat to slightly positive, right? So it's really just a very narrow sliver of the overall market that is actually driving these, that's driving these valuations. So even if we look at the correlations within the S&P 500 are very, very low, which means that when we think about the stock market, when we say the stock market, we're really talking about 7 or 10 stocks. We're not really talking about all 500 in the index. So this becomes somewhat concerning, because when we make an economic projection and we say, what is the health of the economy, the equity markets should reflect that in some ways, but we're actually not seeing that. So we need to be a little bit careful in terms of how we connect those two things.
I wonder, you know, nobody ever wants to talk about the election because you don't want to get political, but last Thursday's debate showed us a really disappointing performance from President Biden, and that raises the chances that Trump will occupy the White House. If he does, Larry Summers has said his policies would be extraordinarily inflationary. And indeed, Goldman Sachs has just come out saying that if Trump wins and put those policies in place, that the Fed's going to have to raise rates 5 times. To me, that's a pretty shocking message from Janasiewicz' team at Goldman Sachs. Do you have to start talking to your clients about the risk around the November election?
So I think what's interesting about this is that when you ask people the question, will the election be a volatility event for the markets, they say yes. When you ask them, what are you actually doing about it? They say not very much, because it's really hard to discern. If we take Trump's supposed policies at face value, which is tariffs and maybe potentially weakening the dollar and spending and all these various things at the headline level, that could be thought of as inflationary. But look, he's already been president. We know what he's done. A lot of times he comes out and he'll throw a very high headline number out there for tariffs, and he's willing to negotiate it back down. So to the extent that the market tries to anticipate what's the real number, what really actually happens versus what is he projecting and what is he saying, there's a huge gap in between those two things. So it's easy to make a projection and say, if I take this at face value, this could mean, the following inflationary outcomes, and this could be bad for the markets. But if we say, what is real? What are you really betting on, and what are you really pricing in? That's what I look to the markets. The market's a better voting machine than what many of the analysts are effectively saying. And what the market's saying is that it doesn't necessarily believe that. Look, if Trump is ahead in the polls as he is today, supposedly, as far as we know, the markets are already pricing this in. I don't think the markets see this. So I think there's a big difference between what the markets are voting on and maybe what Mr. Summers, who I, by the way, admire greatly, is actually saying.
Yep, it's a great point. There's a very big difference between what most politicians say on the campaign trail and then do once they get into office. Jim, thanks so much for joining us. Hope we can have you back soon. Jim Caron there of Morgan Stanley Investment Management. Coming up, one of F1's most wanted gets locked into a new multi-year deal. We'll speak to Pierre Gasly about Alpine F1, his new contract, and future prospects. This is Bloomberg. As F1 drivers scramble to secure seats for next season, Pierre Gasly has locked up his spot at Alpine F1 in a multi-year deal. Now the question is, who will join his team after Esteban Ocon leaves in 2025, and which power plant will Gasly get when the rules change in 2026? Here with me now is GP winner Pierre Gasly, Alpine F1 driver. Pierre, great to have you on the program. Thanks so much for joining us. I want to first ask about the improvements you've made. Alpine had a very tough start to the season, but you and Ocon have been adding to the points in the last few races. What have you done that's different?
Well, thanks for having me, first of all. Yeah, it hasn't been the easiest start of the season. Lined up in Bahrain for the first race of the year on the last row, which was a big disappointment. But then after that, yeah, we just had to focus on the package we had, constant work, and the team has done an incredible work. We've been scoring points in the last 4 races. So yeah, we're having a good momentum, and hopefully we can keep that going in the coming races.
You've signed what's called a multi-year contract. You are basically a team leader for Alpine now. Can you give us any details? Because I seem to recall that you signed a multi-year contract last year as well. Is it, a year plus, or is it a multiple year contract?
Multiple from today onwards. Obviously, it's a constant conversation. Lewis Hamilton this year kind of shocked a bit the market with his move to Ferrari early in January, and it kind of triggered the whole market to start conversations a lot earlier than we all had anticipated. So looking at the future, there is a massive regulation change in Formula One in 2026, and it was important for me to secure a strong position, a strong car, a team that will allow me to perform at the front, and a project I really believe in. It hasn't been the best start of the year, but the team really managed to show me a lot of positive signs. Work at the factory, managed to get some new signings from top teams, Red Bull and Ferrari and Mercedes, and I think we have a strong package. So I really believe in the project. It's obviously very strong connection as a French to be representing the only French manufacturer in Formula One, and yeah, I'm very excited for the coming seasons with the team.
How would you feel about a Spanish teammate? As I said, you become, a real leader in the sport and in the business as well. How would you feel about Carlos Sainz as a teammate?
I would love it. I'm not gonna lie. I want the fastest guy available on the market, and yeah, and it's no surprise that Carlos Sainz is the most competitive guy available out there. I think we got a strong team, a strong package. We've seen that we're able to develop. There's obviously still a long way to go, because we all want to be fighting at the front for podium and win in Formula One, but I definitely believe we got the team and the technical staff to do so. And yeah, let's see what will happen, but yeah, I would definitely not mind.
You've also got Flavio Briatore, who is clearly a powerhouse in the sport, a champion in his own right, a multi-year champion. What have you seen him do at Alpine?
I saw Flavio, for the first time in Barcelona in the team. I obviously met him earlier, a couple of years ago, but yeah, properly in his Alpine role. He is extremely motivated, and I definitely welcome anyone that wants to contribute positively to the team. And he's got huge experience, a lot of connections in the F1 world, and definitely want to see Alpine right at the top. So we're sharing the same ambition, the same targets, and yeah, I'm looking forward to work with him.
You think he's talking with Andretti? I mean, FIA has said if Andretti wants a spot on the grid, they should think about buying Alpine. He's obviously a great negotiator as well, and as Americans, we care about Andretti. What's your take on that?
This won't happen. Alpine's not for sale, and Renault CEO Luca De Meo has said it number of times already. So I think Andretti's got a plan to come in F1, and will be definitely great to see them getting a spot on the grid. But yeah, definitely the Alpine is not for sale, and the ambition is definitely to make it to the top of Formula One.
Do you have a preferred engine supplier if Renault doesn't make the power plant for the new rule change in 2026? It's been talked about a lot that you could become a customer. Would you like to buy a Mercedes motor, for example?
Well, my preferred option is the fastest engine available. I want the strongest package possible to win races, and obviously the car is one element, the engine is another very important element. So yeah, just we'll always support the strongest package available.
All right, Pierre, great to get some time with you. Thanks so much for joining us. I know you're going to talk with Bloomberg's Jason Kelly about the business of sports and about the entrepreneurship that you've been doing. So we look forward to hearing more from you. Pierre Gasly there of Alpine F1 GP winner and now signed on for multiple years to the team. Coming up, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg. Time now for the trading diary, what you need to be watching this shortened holiday week. A slew of eco data comes out at the top of the hour. At 2 p.m., we're going to get Fed minutes. Mike McKee in Washington for that. Tomorrow, the markets are closed for the July 4th holiday, and the UK holds its general election. If anyone comes back to work on Friday, you have the jobs report to look forward to, and that's a rather important piece of economic data. On Monday, we launch Bloomberg Open Interest, 2 hours of single stock stories and the players who are shaping the trading narrative. My co-anchors, Katie Greifeld and Sonali Basak, join me now with the preview. Pretty exciting. We've been doing a little rehearsal for this program that we're launching. Yeah, what's your take? I mean, what are you looking forward to?
Very exciting. I mean, we start off the show with Mike Wilson. Strong note on equities. We're going to be coming off a strong weekend of a lot of talking about what's happening in elections, right, between the U.S., France, and the UK. Katie, what are you looking at?
I'm excited to also talk to Michael Wilson. We're going to be speaking to Howard Marks as well. And playing to Matt's strengths, we have Stefan Winkelmann, of course, the Lambo CEO as well. And just broadly, you think about the concept of this show. Obviously, we talk about the macro all the time on Bloomberg Television. But the guiding light here is we're going to tell the macro through the micro. We're going to talk to the CEOs behind these big companies that we talk to all the time.
And maybe when we're done, maybe Matt can teach us how to drive stick shift.
You must know. You just got a new car. Is it not stick shift?
I've tried once. Automatic only.
I get it. Listen, we're going to be talking about the company stories, talking to CEOs, talking to sell-side analysts, talking to fund managers all the time. And one of those analysts, market strategists that we will talk about is leaving JP Morgan.
Yeah, certainly it's a really big moment, right? Because Marko Kolanovic has been such a big voice in markets. He has been more bearish than others. He's had a lower price target than many on the street, most on the street, I believe all of them, at 4,200. Of course, now the chief equity strategist is stepping into his role here of chief market strategist.
Even though equity calls were the problem, right?
Yeah, you have to wonder how they might approach this differently with new leadership. Remember, Marco was also the co-head of research as well, and it looks like there will only be a sole head of research, maybe some positioning open for some new talent at the top.
This is Bloomberg.